Hello, my name's David Miller and I'm the manager of Nexus Global Solutions and the co-manager of Dynamic. I'm speaking to you from London. It's early September, holidays are over and we're getting ready for the autumn offensive. Just to catch up with the summer, July was a good month for investors, August pretty flat, and that's really because economic numbers have been good, company results have been good, politics has been dreadful. And we're living with that on a day-by-day basis, whether it's trade wars emanating out of Washington or Brexit uncertainty. Nothing on that side has changed, but as I said, what has been working mainly around the world, economies are doing well. But I'll come back to that in a bit more detail in a moment. In terms of asset allocation, no need for any changes there. Dynamic remains almost fully invested, 96% in equities. Solutions, which is diversified, 57% equities, 15% in alternatives, and the rest in fixed interest and cash. Not much change on that side. Really the story of the last few months though, it's been the US versus the rest. Partly that's been inspired by President Trump's policies, partly I think because the US economy is just doing well. Consumers are reasonably confident, companies are investing and employing, and it has some of the best growth companies in the world. What isn't there to like about all of that? And that's all added up to why performance for the portfolios has been reasonable over the summer, and that's because we've got good weightings in the US. Performance isn't just about technology, but it has been good to be invested in the two $1 trillion companies now in the world, Amazon and prior to that Apple. But there have been a number of others, Dolby, Palo Alto, AMD, companies that we put into the portfolios in recent months are performing really well. And it's not just that, it's a wide range of companies, whether it's a chemical company, DuPont, drug company, Pfizer, a whole range of things are doing really quite well. And only the financials have been struggling a bit, but that's after a good period of performance earlier in the year. In Europe, a bit more mixed. It's all down to stock selection. I won't go into the detail, but there are plenty of companies that we're invested in that are adding value despite a less satisfactory overall environment for business. The key thing though for the portfolios is that the emphasis has been on the bigger economies, the developed markets, and not the emerging markets. And if there was a problem, it's in the emerging markets. Solutions has got about 4% in emerging markets in Asia, Dynamic about 7%, not significant in the grand scheme of things. And the reason emerging markets are having trouble is partly self-inflicted in places like Turkey, Venezuela, we're not in those, and partly it's because of the strong dollar and rising interest rates in the US. Some combination of the above, but quite clearly that idea that emerging economies are just going to grow more rapidly than the rest of the world forever has been proved wrong, and we're starting to see that in market returns. Other areas, fixed interest, pretty steady. It's our insurance policy against uncertainty, and in the alternatives, a few of the hedge funds are adding value, trading volatility in an intelligent way. So that's really to report on where we are at the moment. I think to sum up, there are quite a few issues to be resolved this autumn. There's a lot of careless talk about US equities are too expensive to buy, or why not take more risk, or here's something that's guaranteed, but the strategies are based upon investment techniques built up over the last 10 years when quantitative easing changed the rules of the game. None of the above apply to either Solutions or Dynamic. We're focusing on quality, liquidity, diversification, and most importantly, we're right in there trying to find companies that are growing and paying better dividends. And that's what's working. And it's been working for some time now, and it's certainly not changing anytime soon. In the Second World War, there was a campaign in the UK which was entitled "Careless Talk Costs Lives." Now, fortunately, in investment, careless talk doesn't cost lives, but it can be bad for your wealth. And I think that the key message I want to leave you with for the autumn is that we're focusing on the things that we can analyse and make decisions about. We're keeping a close eye on the things that we can't control, where we can worry, but we're not actually having to do anything about it at the moment. And that's why the foundations of the portfolios are as they are. There is a plan, we're implementing it on a daily basis. I hope that's useful, and I look forward to reporting to you in a month's time. Thank you.